What's up, everyone? Today is Wednesday, October 27th. So I know I haven't been making videos recently. It's been a couple of weeks since, I've been making active videos or, being active in the chat. And probably the main reason for that is college. A lot of you guys know that I started college, so I'm still adjusting to it, still figuring things out. And because of that, uh, my my trading, my trading and trading schedule has also changed a bit. Previous to college, I had the opportunity to trade, 5, 6 hours a day, and now, I really only have an hour or an hour and a half every single morning to trade. That's just because of classes and other time commitments. So that being said, trend trading isn't really the most viable option for me, just because of time commitments and because of other issues that I'm going to go over. So I kind of decided to make this video just to, update everybody, just talk about where I've been these last couple of weeks, small adjustments to my strategy, very, very minor tweaks, the way I see things a little bit differently now. So just a video to catch everybody up and talk about my changed trading style just a little bit. Okay, so a lot of you guys know that I trade very similar to Dylan. So the way I would do that is, I would find major areas of support and resistance on higher time frames, and then target them to supplier demand zones. Give you a quick example of that. Apple right here has a major breakout level on the daily and 1 hour. So my plan would be to take a breakout of this level, targeting the nearest supply zone. So you can quickly go look for a supply zone. On the daily, three. Can't really find a supply zone right here off the top of my screen, but the main thing is, I would find these levels on a higher time frame, and I would target them to supply and demand zones. Um, However, just because of time commitments, I don't really have the option to sit in trades every single minute and watch the screens for 2 3 hours a day. So it's been a little bit difficult to trend trade. So that that was kind of the first reason why I was exploring other trading styles. And I'm gonna get more into it. I haven't fully committed to scalping, but I have developed a more scalping style. It's more of a mix between scalping and trend trading. I call it selective scalping. But the other issue I had with the strategy, and not to say that the strategy was bad, this strategy worked out. I was profitable with it. I found consistency trading this way over the last, I think it was 6.5 months. Um, However, I did have, a couple of issues with this strategy. The first one being risk management. And I'm gonna explain that a little bit more. So if I go to a random chart, we go to crowd, for example. So let me go ahead and explain a little bit more what I mean. I'm gonna go ahead and find a level I would probably take a breakout of. This level looks good right here. If you're curious to see how I'm finding these levels and all of that, you can go ahead and go to other YouTube videos, or you can hit me up on Discord or YouTube, and I can help you with that. But um, it's kind of hard to find an example. But what I would do is, I would be very, very patient with my stops. I would wait for a 5 minute candle close below the level or below an area, and what would happen is I was patient enough for the trade to work out, but when the trade didn't work out, and I waited for that 5 minute candle close, especially if it was near the open, especially if it was a Thursday or Friday, I would potentially lose up to 30 or 40% of the premiums. And that was kind of the first thing which caught my eye. And I was thinking to myself that, okay, I follow the plan perfectly. However, I'm still losing 30 to 40% occasionally on some plays. That is simply not acceptable. If I want to trade consistently, become consistently profitable, and consistently trade as a living, I cannot be risking 30 to 40% of the position or of the premiums just by waiting for a 5 minute candle close. So that was another issue I had with it. Obviously, when you do win with the strategy, you are making like anywhere from like 50 to 200, 300% return on investment. But the 40 to 50% losses would be a pretty big deal. It was just something I really couldn't afford letting happen to me more and more often. So that was another issue. And the final issue, this kind of came from journaling. Journaling your trades is a very, very effective way to see what you're doing right, what you're doing wrong, and how to improve on the little things. But what I noticed was um, I was finding myself trying to correct every small detail in the market. So what do I mean by that? Sometimes if a trade didn't work out, I would point it towards volume. Sometimes if a trade didn't work out, I would say price action. So I was being very, very nitpicky. I was trying to find a specific detail on why the market wouldn't, or why the trade would not work out, when in reality some trades just do not work out. So if you combine the fact that some trades do not work out with a lenient stop loss, 30 to 40% of the premiums, then you can lose money very, very quickly. And it was kind of frustrating because I would try to find like small reasons for why a trade wouldn't work out. I'll give you an example. Um, Crowdsource CRWD. I remember taking a trade on this. Um, it was either this or coin, but it was a very, very solid trade. I entered my position. I respected my stop loss. However, when I stopped out, it was 40, no, it was 50% of the premiums. And I was thinking to myself that, okay, I cannot lose 50% of the premiums. It logically, risk to reward wise, it doesn't make sense. And then when I was going back through my journal, trying to find a reason for why it was not working, the conclusion I came to was it simply, just didn't work out. And that kind of leads into another point I want to talk about. The market is composed of infinite variables. Things are always changing. You always have to adapt to it. So what I realized is that some trades will just not work out, and the best way to combat that and to be profitable and to move forward is just to minimize your risk. So those 3 points, one being time constraints, two being excessive risk, and three, there being infinite variables. I kind of developed a scalping strategy. I will go and explain this a little bit more in depth, especially with some trading examples and trades that I've taken in the last week. But essentially, what I do is it's very similar. I find key areas of support and resistance. So, for example, let's go Apple right here. This is the setup I'm watching. Apple above this level. So I still draw my levels. I'm finding major areas of breakouts. But what I will do is, I will go to a 1 and 5 minute, and I will look for quick flag patterns around those levels. So if I go to Tesla, for example, this right here was a trade I took. We had a quick flag break before high of day and all-time high. I took this, got a quick move in my favor. As soon as we started pulling back, I exited the position. So I'm in and out of trades very, very quickly. If I see a major technical breakout, I will hold some contracts to run further. But for the consensus, for the majority, I'm in and out very, very quickly. So I'm kind of sacrificing bigger gains, and in return for that, I'm keeping my risk super, super tight. So that's kind of like a overview of what's been going on the last couple of weeks. A couple of you may be wondering, okay, how can you potentially, be consistent when you're only getting very, very small gains? And this kind of goes back to a point which I've talked about numerous times. In trading, there should only be three results. The first is there should only be a very, very small loss. If you take the setup, it doesn't work. You need to get out, in my opinion, right away. You need to minimize the loss. The second possibility is us taking a very, very small win. Example, my bad. For example, this Tesla trade that I took was a very, very small winner. And finally, you can have big, big winning trades. And even with scalping, that is possible. Uh, I'll go ahead and show you. We just add a time frame. Give me a second. Adjusting the time frame for everyone. What day was it? Oh, Okay, resisting. Yep. So this was a breakout over a major technical level. This quick flag pattern on the 1 minute time frame, this 2 or 3 minute push up here was a 75% return on investment, right? So this is an example of a big winner. This is an example of a move you want to catch. And then, on days where the market is choppy, you should only be taking small losses or small wins, just minimizing that risk. And then, when big opportunities present themselves, that's when you want to strike and capitalize the major move. So for those wondering, how can you still catch big moves? That is how. There are still very, very big moves in scalping. There's still a lot of money to make. And when you are breaking a major technical level, for example, this 877.5 level was a major technical level. Once we broke through that, that's what kickstarted the move to 1.1K. But when we do break these major technical levels, you can hold a couple of contracts to catch a potential move higher. But yeah, that's kind of like a small overview of what's been going on the last week. Still trading very, very similarly. However, I adjusted a more scalping mentality. And one more thing I want to go over is, a couple of you may be wondering why my charts are completely empty except for levels. You guys are probably wondering where are my supply and demand zones, and it's kind of shocking. It may be a bit shocking, but I'm not really using supply and demand zones anymore. And the main reason for that is you have to understand what is the main principle behind supply and demand. So supply and demand is areas of profit, areas of target. They're basically price imbalances where sellers and buyers are stacked. However, when you are scalping, when you are in and out very, very quickly, when you're catching these smaller moves, it doesn't really matter if there is supply or demand placed, because you're only catching a small piece of the move. You're not trend trading. You're not trading towards targets. It doesn't really matter if there's supply or demand, because you're only hoping to get in and out very, very quickly, and that itself can yield you a lot of money. So that's why I'm not really using supply and demand. I still do keep it up at times. Maybe if I'm taking a major breakout and I'm holding a couple of contracts, then I will use supply and demand as areas of targets and caution areas. But besides that, I'm not really using supply and demand that much, just because when we break a level and you're scalping, you just want to catch that quick momentum move. And obviously, less return on investment. However, the risk is super, super tight. If the trade does not go in my favor, in the next couple of seconds, I am out. I can always reevaluate and I can always re-enter the position. And in my opinion, that mentality of keeping that risk tight and then striking when big opportunities present themselves is the key to trading consistently, because you're not taking these big losses. You still can catch these big winners, and you're staying grounded emotionally and making the right logical decisions. But I think I'm gonna end the video here with the supply and demand stuff. If you have any questions, just hit me up on Discord or YouTube. I am still back testing it. It has been working out pretty well these last week or so, week or 2 weeks or however long I haven't been here. But if you do have any questions, just hit me up on Discord or YouTube, and I will get back to you, especially if you are confused about the supply and demand thing.